As we start to move into exit strategies of the crisis and into the recovery phase, how can banks provide practical support to their clients and small businesses? And what actions can banks take today to enable a systemic, sustainable, and green recovery?
Thanks, Walid. Well, in terms of the actions that banks can take, I've had thoughts in terms of how we could maybe divide things up logically into 3 levels of activity. So in terms of the levels of response, for right now, we are inevitably in crisis management mode of one form or another. We've been sort of taking the actions to make sure that our institutions are safe, that our clients, our staff are safe, and really it's been about addressing some of the immediate needs and immediate financial needs. So whether that's being able to ensure that clients understand what's available from government support packages, organizing various interest and capital repayment holidays, or the sort of business interruption loans. It's really been at the level of survival. What I wanted to suggest, though, as we kind of are emerging and sort of from the exit strategies from the coronavirus in different countries at different speeds, still with huge uncertainty, what level of practical support can be given to businesses, our clients, and in particular then to be able to look beyond in terms of the recovery or the sort of the economic renewal, and think what's the role that banks, especially signatories to UN Principles of Responsible Banking, thinking around societal needs, can do to make sure that that systemic recovery is as sustainable as possible. So maybe just to turn to practical support now, and really kind of looking at how can banks support their clients, in particular SME clients, with figuring out the uncertainties ahead. So really being able to potentially offer some of the tools for scenario planning. We don't know whether the virus is going to be there's going to be a sort of a bounce back. We're at this kind of cusp where we're just at that point now, as we're kind of in early May. We could be witnessing multiple waves of this continuing for some time, or there could be a permanent change. There's real uncertainty there, and there's different levels of impact in terms of any business. Looking at whether or not to pivot and adapt, businesses are going to need to think through those scenarios. What point do they just hang in there, and what point might they need to make significant investment in changing some of their business model? Having this scenario analysis will be very valuable for clients. It's also critical for credit risk management and understanding what the bank's position is going to be towards that client as things evolve. So too is looking at the supply chain. So every single client has a number of suppliers, and likewise in terms of the broader value chain, customers who may be quite vulnerable or in a period of being in crisis or closing. They might be changing very rapidly themselves, or less affected. So by segmenting the different elements of the supply chain in terms of those who are critical, those who are important, and those who are secondary, you can start to make some sense of, well, what are the actions that you need to do? And in particular, to be able to be aware of what are the alternatives? How can you, from a business continuity perspective, keep things running? Are there specific elements of support that those businesses are going to need to give to their suppliers in order for them to keep trading successfully? And likewise, if there's going to be changes that a business is going to be able to make, are they going to be able to take their suppliers with them? Taking that example on, I mean, if you looked at supporting business models pivoting or adapting, we've seen some very big changes right now. We've seen restaurants who have been forced to close potentially becoming shops. We've seen other facilities sort of using buildings in different ways, also using their skill sets in different ways. A typical kind of matrix here. So being able to kind of have an analysis of where are there some changes which might be required, which are going to be close to the skill sets and capabilities of the existing business, and where is it going to require maybe new skill sets or resources. So is it going to be teaming up with, in some partnership with a logistics company, for example? Where is it serving existing markets and customers? And where is it potentially reaching out to new customers? There's been quite a big expansion you've seen, for example, in a lot of the organic delivery, food delivery schemes, that they've suddenly swelled their customer bases quite a lot through increased demand. How can you also be able to kind of use what you do to reach out to them? And typically, you know, in kind of classical strategy, the key areas to look at when you're not able to serve the existing customers in exactly the same ways is how might you use your skill sets to reach out to new customers, new markets, or how can you maybe bring in other sets of skills or resources to be able to make a change so that you can continue serving your existing market and customers in a new way. Again, this is going to be quite analysis intensive, and it may be that businesses are not ready to make those decisions. Being able to perform some form of credit analysis on the different options and the value propositions is going to be really helpful right now for those clients, and it's also going to be able to create the pathways for banks to be able to channel lending towards those positive developments that allows them to survive and thrive as we go through to the exit phase. Some other kind of elements of practical support, just to go through quickly, in terms of communications, all clients are going to be vulnerable right now to how they communicate to their customers, suppliers, employees, their regulators, certainly their creditors and investors, and to local stakeholders. Banks have been certainly involved in this, and you be able to synthesize perhaps where is their best practice, what from the point of view of what's going on in the business is going to be most helpful to make sure that clients stay on top of in managing their communications and customer relations to give them the best chances of weathering this storm. Likewise, we have seen that there's going to be a lot of temporary short-term debt, business recovery loans. A lot of clients are actually at risk of maybe being over leveraged and a need for equity to come in. However, in being able to support clients in finding new investors or partners, potentially through government schemes or crowdfunding, corporate, more traditional corporate finance or funds that the banks have, or business angels, there are potentially ways for banks to take a proactive stance. In the UK, however, the regulator, the Financial Conduct Authority, did warn banks not to put pressure on clients during this crisis to push any services onto clients. And I think there's a real tension there between needing to be able to offer the right customized support from a point of view of understanding the overall financial setup, from being able to act still with kind of high moral ethics and standards in terms of how any services are arranged. But as I said, there's a number of different means of being able to support clients in being able to find those avenues. It doesn't need to be directly banks offering those equity services. And likewise, especially for clients who may be going through some very big changes in terms of how they restructure, there will be large implications in terms of job losses. Perhaps offices with the increase in remote working may not reopen. Understanding the financial consequences of those restructuring from an HR, from a tax and a legal point of view are going to be really important. It's not that the bank necessarily gives the answers at all, because that's not the bank's place. However, being able to ask the right questions and make sure that clients are being supported in making the connections to the right independent advice is again going to be critical to the bank and to the client. I think that all of those level 2 practical support things, therefore, you can see that there's a huge synergy in that it's supporting the bank through supporting clients and supporting clients through supporting the bank. So there's a real strategic cohesion to these types of actions. If we go on now to the next level, however, where banks who are interested and motivated through their purpose to think about what is the longer future going to hold for us? How can this crisis and the recovery from it open up possibilities to better address the needs of society, in particular the environmental and social issues which we have already, many of which are going to be linked and impacted by COVID-19. So in terms of enabling systemic recovery, thinking about how can we make this a green and inclusive recovery, what's the bank's role in playing a proactive part in that? Again, through clients, I think there's a huge possibility to be able to facilitate the community of their clients and stakeholders through the vast networks that banks have in being able to ask some of those questions. This is an example from Triodos Bank, which is connecting different clients with different innovations which they have. But we can go further in being able to look at how do business clients optimize their efforts in being able to support society and the transition opportunities. So if we're looking at potential green shoots of a green recovery on the next crises we face in climate change, in natural capital depletion, biodiversity loss, in social inequality, where can we help clients to be able to discuss, find connections, find partnerships to transform their business models in line with those societal challenges? And how do we make those new partnerships for industries which require major change? We're seeing, for example, in the aviation industry, huge survival questions. The focus right now is on the conditions for bailout, but very soon will be how would the aviation industry really be able to transform itself to be fit for the future? And what role, again, has finance got in being able to play a proactive part in this? And I think that really all of these, in different ways, are about being able to leverage the potential for network and recognizing the value that is brought, not just by connecting people and businesses to money and finance, but being able to connect businesses to one another through the bank and the expertise that is gained. Moving on, I think if you saw the recent paper just this week from Joe Stiglitz and Nicholas Stern, you're seeing a lot of papers writing about what might this new recovery look like and how might the economy be stimulated along the lines of a green and inclusive recovery. They talk about, in particular, some sectors where there's going to be some win-wins in clean physical infrastructure investment, in building efficiency retrofits, in investment in education and in health, especially in being able to address immediate unemployment from COVID-19, and particularly as we go through, if we went into rapid decarbonisation, the structural unemployment resulting from that. Natural capital investment, ecosystem resilience, the whole principles of regenerative agriculture, and clean R&D investment. All of these are going to be very interesting sectors for the future, and the authors, as economists, argue that these aren't just good for the environment, they're also going to be the most helpful in being able to stimulate the economy, provide the decent jobs for the future. So how can banks get behind this? And in particular, how might banks be able to allocate already or create specialist funding teams to help some of these emerging business models within these sectors? Because whilst governments can, for example, stimulate building efficiency retrofits, how the finance is organized at the level of households or businesses, that's something which I think banks have got a lot of experience on and can be proactive in shaping how that gets done. And finally, in terms of advocating for the sector transitions, the principles for responsible banking, under principle 1, we've argued that we're going to align our business strategy to contribute to individual needs and society's goals like the SDGs and Paris Climate Agreement, and that in principle 4, we're going to proactively and responsibly consult, engage and partner with relevant stakeholders to achieve those goals. What can we be doing right now to proactively advocate for this? In Europe, there's been the Green Recovery Alliance. I think there is a major voice of the global banking community which needs to be heard right now as being custodians for the future. Through maturity transformation, we make agreements about what's going to be sustainable from an economic as well as environmental and social perspective in the future. Our voice needs to be heard in terms of the kind of transition that we want. We've been discussing for a long time within the banking industry, who are very close to the real economy, the recognition of climate risks, of the risks in biodiversity loss, in social inequality, and the needs for social inclusion and greater shared prosperity. How do we advocate for all of that within the policy responses to make sure that banks can be heard as the progressive voice that we need in this debate? Those were the ideas which I had to share. There's practical examples emerging every day of things within this space. I'm very happy to be in touch with any members who want to discuss any of these ideas further.
Thank you very much, James.